Hello, everyone, and welcome back to Financial Podcast. I'm your host, Olivia. Today, we're diving into some key economic news, focusing on remarks from Federal Reserve Chairman Jerome Powell and the ongoing discussion around interest rates in the economy. It's a topic that impacts everyone, from individual investors to large corporations, and understanding the nuances is crucial for navigating the current financial landscape. Chairman Powell recently delivered remarks at the Federal Reserve Board's International Finance Division's 75th anniversary conference in Washington, D.C. This conference is a significant event, marking a major milestone for a division that plays a vital role within the Federal Reserve System. The event featured panel discussions looking back at the division's history and the people who have shaped it, as well as academic sessions and presentations from former economists from the division. Powell's speech at this 75th anniversary event honored the Division of International Finance, highlighting its critical work in analyzing global economic trends, international trade, and capital flows. The research produced by this division is essential. It informs the Federal Reserve's monetary policy decisions and has been instrumental in aiding crisis response over the years, from major events like the Latin American debt crisis to the more recent challenges posed by the pandemic. Powell praised the division for its contributions to maintaining global financial stability and for its ongoing support of the Federal Reserve's overarching mission to serve all Americans. This perspective, drawing on decades of experience through various economic challenges, provides a backdrop for understanding the Fed's current approach. Just days before these remarks, Chairman Powell had a meeting at the White House with President Trump. This meeting, which took place on May 29th, was initiated at the invitation of the president. It marked Powell's first visit to the White House during what the sources referred to as Trump's second tour. The stated agenda for the meeting was to discuss recent economic developments, including important factors such as growth, employment, and inflation. However, the meeting wasn't just a general economic chat. President Trump used the opportunity to express his long-held views directly to Powell, reiterating what he had been saying publicly and tweeting for months. Trump told Powell in person that he believed the Federal Reserve's refusal to cut interest rates was a mistake that was damaging the economy. This isn't a new point of contention between the two. Trump and the Fed have been engaged in a debate for quite some time regarding whether interest rates should be lowered. Despite President Trump's clear desire for immediate action to lower rates, Chairman Powell maintained his position. According to a statement from the Fed following the White House meeting, Powell did not discuss his specific expectations for monetary policy during the discussion. He stressed that the path of monetary policy would depend entirely on the incoming economic information and what that data suggests for the economic outlook. Powell also emphasized that he and his colleagues on the Federal Reserve Board are committed to setting monetary policy as required by law. This mandate is to support maximum employment and stable prices. He stated clearly that their decisions would be made based solely on careful, objective, and non-political analysis. A White House spokeswoman confirmed the Fed's account of the meeting, but added that the president indeed pressed for immediate action to lower rates. The Federal Reserve operates under what's known as a dual mandate. This means the central bank has two primary goals: to target low inflation and to target low unemployment. These goals can sometimes be in tension with each other. For instance, the Fed can raise interest rates, which is a tool used to slow down inflation, but this action can potentially lead to an increase in unemployment. Conversely, the Fed can cut interest rates, a measure often taken to boost job growth, but this can carry the risk of increasing inflation. This creates a delicate balancing act for the central bank. Adding to the context, the sources mentioned that the Board of Governors of the Federal Reserve System had voted unanimously in early May to keep the primary credit rate at its existing level of 4.5%. This decision meant that interest rates for lenders, consumers, and the rest of the American public were not going to change in the near term, a stance that was met with dismay from the Trump administration. The central bank indicated that this stance would be updated as appropriate to reflect decisions from the Federal Open Market Committee or the Board of Governors regarding their operational tools and approach to implementing monetary policy. The debate over interest rates isn't happening in a vacuum. The sources note that monetary and stock market experts generally expect the Federal Reserve might lower interest rates by a quarter point later in the year, perhaps in September. However, President Trump made it clear during his meeting with Powell that he wanted these cuts to happen sooner. The persistent demands from Trump also underscore the volatility in U.S. trade policy, particularly with tariffs against China and the EU, which have contributed to economic jitters and sent bond yields higher, according to reports. Some experts have even publicly warned about the possibility of a recession within a few months or a period of stagflation. It's worth noting that amid all this discussion and speculation, rumors surfaced on social media, particularly on platform X, suggesting that Chairman Powell might resign. However, according to the sources, there has been no proof to support these rumors. A popular prediction market called Polymarket reportedly showed little belief in these claims. One specific betting contract on Polymarket, asking will Trump remove Jerome Powell in 2025, remains steady at just a 12% chance, showing no increase even after the rumors began circulating. The rules of this contract specify that it would only resolve to yes if Powell ceases to be Fed chair before December 31st, 2025. Despite some prominent accounts on X pushing the resignation rumors, the sources reiterate the lack of concrete evidence. This is further complicated by past statements attributed to President Trump where he indicated he had no intention of firing Powell, even while frequently criticizing him. Powell himself has consistently stated that the Fed's decisions are based on objective economic analysis, independent of political pressure. Understanding these dynamics is part of what the title of one source points towards, the importance of financial literacy. While the details weren't expanded upon in that particular excerpt, navigating economic information and central bank actions requires a degree of understanding of how these pieces fit together. Chairman Powell honoring the 75th anniversary of the International Finance Division and discussing its role in analyzing global economic trends, trade, and capital flows highlights the interconnectedness of the global financial system and the importance of sophisticated analysis to inform policy. The mention of the division's role in responding to crises, from the Latin American debt crisis to the pandemic, also reflects a history of adapting to challenges and supporting economic stability. In essence, the situation involves the Federal Reserve, led by Chairman Powell, adhering to its dual mandate and basing policy decisions on incoming economic data and objective analysis. This is happening alongside political pressure from figures like President Trump, who publicly advocate for lower interest rates based on their assessment of the economy and inflation. The recent meeting brought these differing perspectives face to face, but the Fed's public stance remains focused on its statutory responsibilities and independent analysis. Market participants and the public are closely watching the incoming economic data and statements from Fed officials for clues about the timing and magnitude of any potential future interest rate adjustments. The Federal Reserve's actions directly influence borrowing costs for businesses and consumers, the profitability of investments, and the overall pace of economic activity, making these discussions highly relevant to everyone's financial life. Thank you for tuning into Financial Podcast. I hope this deep dive into the recent news surrounding Chairman Powell and the Federal Reserve has been informative. Remember to stay informed and continue building your financial knowledge. Until next time, take care.